let's go ahead and get started. So tonight's class, we're going to be talking about working with Wall Street for better results. A lot of people are afraid about making money in the stock market. They think I just can't do it. I'm not smart enough. I got to tell you, technology has changed so much in the last 20, 30 years or so. Things that we didn't know were possible are now possible for us. But we're not taught this. We're still taught, give your money to somebody else. Let them manage your portfolio for you, because that's where all the money really comes from, and where they're making their money. It's not in their best interest to teach this to you. So I'm going to show you some really cool things you can do now in the stock market. So many things are online, some great tools for us. I'm going to show you how really simple it is to make money in the stock market. It's really not that difficult. It can be if you want it to be, but it's not that difficult. It's just different. We haven't been taught how to use the stock market. We've been taught to be a good person with good morals and values, go to school, get an education, and get a job. But they don't teach you in school how to actually make money in the stock market. But we've had quite a few of our attendees coming through some of our classes here that actually are coming from the colleges as administrators or professors, things like that, come to our classes so they can start to teach this. All right. If you don't know a little about who we are, if you've ever heard of some of these other names out here, this is really just us. We do a lot of classes for a lot of different companies. We're largest stock market education company in North America, and we do classes for almost everybody. So if you've ever taken any classes from some of these other people up here, it's really just us. But we're here right now with Protect Wealth doing some fantastic courses, because everything we're trying to teach here really matches up with what they're doing at the same time, especially if you're trying to make some money in some type of a corporation, LLC. By the way, you can use inside of a Roth account, an IRA account, some business accounts, corporate accounts, kids accounts, custodial accounts, or your own personal accounts, all kinds of different stuff. Are there any equity investments, William, here that says it can be bought or sold on a daily basis without being classified as a day trader for tax purposes? There are, not necessarily on the equity side, but on some of the other commodities and things, some things you can do. This class isn't going to be necessarily about day trading, but you can use some of the information I'm going to teach you tonight to use that for some day trading purposes. I'm really going to talk about managing portfolios today and some of the things you can do to get a better rate of return than what you're probably getting right now. But there are some things out there, William, not so much on the stock side, though. If you're maybe trading some deep in the money options, you might use that, because then you're not using any time value for it, so we can use those. All right, nice quote here I got here from, by the way, that's me on the right-hand side, just in case you can't match up the two faces. A nice quote here I got from Susie Orman. I really like this one here. It says, many people are in the dark when it comes to money, and I'm going to turn on the lights. I think that was pretty cool, because what she's saying is most people are just never taught this information, but it's going to be her job to show people how you can make money. It's not that difficult. Kevin O'Leary over here. In order to create wealth, I need to pair up with people whose strengths compensate for my weaknesses. So if you're not familiar with what you're doing in the stock market, we just need to make sure we're working with reputable companies that can teach you how to go back and do some of that. And then the big guy here with Tony Robbins, knowledge is power, but execution trumps knowledge. So it's what you do from that will matter. In other words, it doesn't matter how smart you are. If you can't use that information to make some money and in a simple way, it doesn't make any difference. And so we're going to try to keep this as simple as possible. I'm going to do my best not to go over your head and just show you what you can do really right after this class to go back and start making some money. A lot of people ask why we do this, and really it is because we're into education. We particularly like to teach kids, and we've given our course training now to over 83,000 different kids to learn about finances. And I'm going to talk about that a little bit later on. For instance, how many of you would actually like to have your kids learning about finances at a very young age, so they're not necessarily going to school to learn how to get a job, but now they can go to school to learn how to actually make money. And then you can choose the job that you want after that point. So health tip of the day before we get started, because I like this one. So we always want to make sure, especially in today's marketplace, what's happening out there. Health tip of the day. Does anybody know what reduces the risk of kidney stones by up to 40%? Got those in here online the other day. And the answer is simply beer. Beer reduces the risk of developing kidney stones by 40%. So my goal for here in this class, I want everybody to stay healthy. And that's what we're after. So history of the stock market and why people in the past have already thought the stock market so difficult. If we just go back and look at the stock market now for about the last 100 years, on average, the stock market goes up between 8 to maybe 12% a year. And that includes long time histories. And through here, we have just 0% because the stock market went sideways for years, 4, 5, 6, 8, 10 years at a time, the stock market goes sideways. So you take away all those losses. If you include all those losses, all those sideways trends, on average, if you just bought and hold, you're still going to gain about 8 to 12% a year in the stock market. Not a bad rate of return if you just buy and hold. Very passive income, buy and be done with it. And I'll talk about some of the things you can go back. They're really simple to buy. and why people are making money now. You hear all over the stock market, but why the average person isn't. Here's a 16-year-old who made $43,000 on 3 stocks in 3 years: Tesla, Google, and Netflix. In his Wells Fargo account, when he first got started, his first year, he made 42% in his very first year, nearly quadrupling his average stock market gain of 11% that year. Likewise, he was up 30% just last year. From ballroom dancer to stock market millionaire. Sometimes in order to innovate, you need to have an outsider's viewpoint. This individual was able to turn $10,000 into $2 million in just 18 months using an early form of technical analysis. And the reason I show that is because most of you have just been taught, oh, I've got to buy and hold. And when do you buy? You buy when they tell you to buy. And then when do you sell? Well, you don't sell because you're in it for the long haul. Well, how do you make a profit if you're in it for the long haul? Because at some point, you're going to actually have to sell. So if you're going to have to sell, maybe you should be taking a look at, when should I sell? I equate a lot of this to, I'm driving down the street and I'm either able to open my eyes and see what's in front of me, the road in front of me, or I can't. Well, I want to see the road because it actually makes me a better driver. Well, in the stock market, I want to be able to look at the stock market. I want to look at a couple of charts to see when they're in an uptrend, when they're going sideways, and when they're actually starting to go into a downtrend. I want to see that. So looking at some charts. So what if we had about $50,000 and we just worked with some average numbers and we said we're going to get 8% a year in my brokerage account. Maybe you've got some mutual funds. 50,000 a year for 20 years compounded would be about $233,000. Not very much money at all. Would you be able to retire off of that? Probably not. You might have a good couple of years, but what happens if you get really sick or something else happens? Then what happens? What if you could change that just a little bit and say, what if I get 17% a year? Because I'm able to do a couple of things different that people aren't taught to do. And the reason they're not taught to do that is because in nobody's best interest. Your brokerage firm doesn't want you to take control of your account. Your money manager, whoever's managing your account, doesn't want you to take control, and you do it because you won't pay them any money. And over the long haul, how much money are they making off your account and everybody else's account if they keep you in the dark? So what if you got 17% a year? That same $50,000 in 20 years is about $1.2 million. Now, I'm not telling you that's what you're going to get, but what if we could just tweak our accounts a little bit to get just a little bit more than average? Not much, maybe 0.5% a month more than average. Because we're going to learn to do things differently because technology changes. I mean, you don't go back and still use that same old telephone that's on the kitchen wall you had back in the 70s when you're growing up. You think that's ridiculous. Now everybody has a cell phone. You don't still use the luggage that doesn't have any wheels on it. You got to put it on a cart when you travel. All luggage has wheels. You know, things change. Technology changes. We need to make sure our brokerage accounts are changing and how we invest changes yourself. So the real question is, should you learn it yourself? And realistically, by the time I'm done, you're going to see it's only going to take you about an hour a month to manage your portfolio, to get that little bit of a difference. So do we do it ourselves or do you pay someone to do it for you? Some people say I'm too busy, but I think that most of us could probably pay our time for it about an hour a month to learn to do this correctly. So pay somebody. Over the last 35 years, since 1986, the S&P 500 index, now the S&P is the benchmark. If you're not familiar with how this works, the S&P is the benchmark. And by the way, if you got some questions, go ahead and answer, or go ahead and type some in. I'll do my best to answer these. And I know that Kendall's going to answer some as well. But go ahead and ask some questions here. Over the past 35 years, since 1986, the S&P index averaged about 11%. The average investor only returned 3%. That seems really strange. Why is that? This is from Dalbar Inc., which is a large financial regulating company. So why did the average investor only get 3%? And that boils down to because you paid somebody else to do this and they're going to pay themselves. So here's what we got just off of CNBC television. I got this today. I took a screenshot off my phone, put it here on the website for you on our PowerPoint. It says institutional investors, and these are some of the largest money managers out there. This is just last year. James Simmons made $1.7 billion, not with an M, but with a B. This is just one person's pay for last year. One person's pay. David, 1.5. Kenneth, 1.4 billion. Ray Dalio, he's out there year after year after year, 1.3 billion. Poor guy only kind of missed the Billionaires Club that year. But this is just some money managers, people who actually manage your money. Not all of them, but think about this. These are the people that you're paying to manage your money. How do you pay that one person's salary, plus all the corporate jets, plus the corporate buildings, plus everybody else that works for the company, plus all of the transaction fees, plus all of the computers and technology, everything else in the company? Who pays for all that? And again, this is one person's salary, $1.7 billion. And you wonder why you're only making a few percent and you're not actually beating the overall market year after year after year, because somebody has to get paid for all of that. And so why would they want to give that all up in order for you to learn this yourself so you could do it without paying them anything. Money talks. And for them, money talks, meaning they're going to tell you, oh, you can't do this. You're not smart enough. Leave it to the professionals. And they want the professionals to do this so they get paid. I get paid too. We're a for-profit education company. I would love for you to pay me $1 billion, but I wouldn't take it unless I actually thought I could make you more than $1 billion type of a scenario. But these people here just want to take your money year after year after year after year forever because you're in it for the long haul. And the answer really is you're not in it for the long haul. You're really in it for profit. But they're taking a huge part of your profit. So what if you take a little bit of that back and got an extra 0.5% a month to get you up to that 17% a year? Not that difficult. We're going to show you how simple it is. Here's 2017, the top 100 fund managers in the US. And there's over 60,000 fund managers. But the top 100, the average fund manager salary was $589 million. Well, that's in 2017. They don't post this every year where it's easy to get to because nobody really wants you to know how much everybody else is paying, getting paid out through there. But here's James Simmons again, 1.8 billion. Isn't that crazy? Just crazy, absolutely crazy. So here's what that's causing. So all these people put money in the stock market for somebody else to manage. And they're taking all of their fees and all of their bonuses and everything else. The state of the American retiree, these are people who actually retire. 23% still have to work. 30% are dependent upon some type of a charity. 45% are dependent on relatives. Only 2% of the American retirees are self-sustaining, which means they can pay all their bills and not have to worry about anybody else helping them out. That's a little bit scary. What that means is the current system is failing, and we've got to go back and change that. And I'm going to show you 4 really simple steps to make it easy for us tonight. You'll be able to start with these steps tonight after this class is over. So here's a good quote. Everybody knows Warren Buffett. And in his book, The Warren Buffett Way, he actually quotes and says, people get a lot for their money when they hire a professional like a plumber or a dentist. And he comes flat out and says, but people get nothing for their money from professional fund managers. So if you've got a mutual fund, somebody else managing your money, all they're doing is taking some of your profits where you could buy 1 or 2 ticker symbols that mimic the overall marketplace and get all that extra money. That's it. You just buy and hold. Trading class in June, I've been using your system methods for a while. I'd like to start using on your other accounts, your 401k and 403b accounts, your employer Fidelity. Michelle says, if I convert some of this over to a brokerage account to allow me to start trading covered calls, options, etc., what kind of additional fees should I expect? Well, you can keep these inside of your 401k, depending on who they're at, especially if they're a Fidelity and your 403b, because a lot of times Fidelity will let you do some covered calls on some ETFs. If you're still with the company, Michelle, then you might decide to just loan yourself some money and then pay it back with some of your profits. So there'll be no additional fees on that if you take that money out. If you're no longer with the company, you can roll over the entire 401k into an IRA account, no additional fees necessary, and then go back and just start trading from that point on. So a couple different ways. Now, if you send me an email after class, I can answer that in a little more detail if you'd like as well. All right. I like that quote, but Warren Buffett says people get nothing for their money from professional fund managers. What that means is if you've got a mutual fund in your account, which is what you've been taught to buy, you're getting nothing from that based on what you could be doing today all by yourself and making additional profits. Peter Lynch from Merrill Lynch. Everybody knows the company Merrill Lynch. Founder, Peter Lynch here. The amateur investor has numerous built-in advantages that should result in outperforming the experts and the markets. You're confused. According to your Transamerica IRA that's managed, the statement says it costs $35 per year. Yep, that will be what they're actually charging you to have the account. That's not what they're charging you in all the hidden fees. If you've got a mutual funds have, the average mutual fund pays about 3.5% per year on fees. They're just hidden. So you can go to investor.gov website, investor.gov. It comes from from the U.S. SEC department, from the Securities Exchange Department, and it tells you all those hidden fees and where they're at. And the average mutual fund in the U.S. today is about 3.5%. It's just not listed. So your Transamerica IRA is not going to go back and tell you that. Let's go through 4 simple steps. Let's go back and cover these. Step number 1, good quality. If I'm going to really start investing in the stock market, I'd like to make sure I buy good quality stock. And as I go through these 4 simple steps, I want you to write these down because I want you to go home tonight. And remember, we're an educational company. I want you to start using this information immediately. I'm not saying take control of your entire portfolio tonight. That's not what I'm saying. But get started with a little bit. Take a little bit of money out, move it and start trading a little bit of your funds. If you want to open up a regular account and paper trade them for a little while until you feel comfortable, that's great too. But you got to take that step and get started. And a lot of people say, well, if this really does work, how come everybody's not doing it? Well, I showed you the quote from two of the largest out there, Warren Buffett and Peter Lynch, which both say that you have built-in advantages and you get nothing from your professional money managers. But a lot of people still don't believe that. And I equate it to weight loss. We all know how to lose weight. It's very simple. Eat less and exercise more. It works for almost 100% of the people who try it. Well, if that's the case, how come people just don't do it? Well, because I like my current life. I like to eat cookies. I like to eat cakes. I like to eat junk food. I like to eat late at nighttime. I like my life. I'm just not willing to make that change. Okay, so what do? Well, I still like to lose weight, but I'm just not going to do it unless I change that. Now, I don't do all that all the time, but my whole point is I use that because everybody understands about losing weight. And so if everybody knows how to lose weight, eat less, exercise more, it works. So nobody disputes that fact. So why doesn't everybody do that then instead? Well, because they like their current lifestyle. They just don't want to give that up. So how come everybody doesn't do this in the stock market, what I'm showing? Because they like their current lifestyle and don't want to go back and learn this. That's why. But it's pretty simple now. It didn't used to be this way, but it is now because of the way technology has changed for us. So before I invest, number one, is it a wonderful business? The first question you ask yourself, and make sure you write these 4 steps down because I want you working on these right after class. Number one, before I invest, is the stock I'm about to buy a wonderful business? In other words, I want to buy a good quality company. So in order to do that, in the old days, we had to go back, do some fundamental analysis, incomes, balance sheets, cash flow statements, look at the financials, quarterly earnings, ratio analysis, discount futures, analyst estimates. There's just a bunch of stuff we had to go back and manually comb through pages one at a time. Oh my goodness, that just stopped most people right there. 99% of people started said, that's about as far as I'm going to get. I'm not going any further than that. So we don't have to do that anymore. Nowadays, everything's online, which means that it can all be computerized. So instead of going through all of that, we can take all that information and just pull it out and say, what are the top 17 things that the institutions look for? And there's many things you can look for, but number one, think of it like you. If you're going to buy a pizza business, no, I like pizza, let's buy a pizza business. Well, the first thing you want to know is it profitable? You don't have to look at every piece of information, but the first thing is it profitable? Is it growing? Is it expected to grow? How much cash is in the bank? I mean, there's some basic things you're going to look at ahead of time. And we're going to look at the top 17 things that the institutions look at, and they're going to be right through here. And we're going to pull that in for every single stock, tens of thousands of stocks in the database. We can now automate the analysis part on every one of those. But here's where we're going to do it a little bit differently than almost every company out there. Since I was first started investing with real estate, and I like real estate quite a bit, it has built-in advantages to it, but so does the stock market, but they're done for 2 different reasons. I like stock market more, but I still use real estate. But because I started with real estate, I use my stock market the same way. So I'm going to just go back and take a look at on through here. Number one column right here is in blue. This is my company. This is my company's information. What is the PE ratio? What's the net profit? What's the previous EPS price? Just information. Don't worry about that. The next column over here is the industry. How does my stock compare to its industry? And this is where we differ. We actually compare our numbers to every stock in the industry. In real estate, that's the same thing as saying, how does my house compare to all the other homes in my neighborhood? And then we've got the sector. How does my real estate house compare to all the homes in my city? And then we've got the S&P 500. How does my house compare to all the homes ranked nationally? So we're going to compare our stock to its neighborhood, to its city, and then to the national numbers and see how well it does. And what I'm really after, just to make this really simple for you, do I have a bunch of green on the page? The more green I have, the better the stock is. I want to see a bunch of green. Here's what I'm after. So I'm just looking at how's my stock company compared to its neighborhood, its sector, and then the national average, which is the S&P 500. So the more green I have, the better the stock is. And if you're not sure what you want it to be, where it says company right over through here, you want that number to be as high as possible or as low as possible based on what's on the right-hand column. But just skip that. I want a bunch of green. The more green, the better. So I like that. As opposed to this stock, which is when this was taken, this was GE, has a whole bunch of what? Red. Now, if I was looking at 2 stocks, I was thinking about buying because I was told, my broker said, here's 2 stocks to buy. They're both in an uptrend. And one of them's got a bunch of red on it. One's got a bunch of green. You're looking at side by side. Which one might you consider owning first? I'm going to consider that first one first. Absolutely. Because it's got a lot more green on it. I like that one versus this one here. It's got a bunch of red. Now we make it even easier because I'm a visual investor. I like looking at things. We're going to put this sign up here that says good stock with a guy here with a big smile on his face. He's really happy. This is a really good stock to go back and buy. And then if it's a bad stock, it's got a bunch of red, we're going to say that's a bad stock. I mean, look at the poor guy. He's even got a frown on his face. So what do I want? Do I want the good stock? Do I want to take a look at all this information here, all this data that we put into our database? Then we pull all the numbers and we rank them all. Or do I want one that just says good stock or bad stock? Just make it really easy. I would like a really good quality stock. not just a good stock, but one that outperforms every stock in its neighborhood, every stock in its sector, and every stock in the S&P 500. I want that good quality stock. So I got a choice. Do I buy one or do I buy two? And I'm going to choose one first. So that's my first item. So what if I said, you know what? Can this be automated? That's a lot of information. There are tens of thousands of stocks in the database. Wouldn't it be really cool if some financial person who likes to invest in the stock market, who understands the stock market, would actually create a website that says scan tens of thousands of stocks in the database and pull up every single stock that's a good quality stock. So we're going to log on and we're just going to click on the link down here. It says good stock. Now, if I click on that link, it will immediately pull up all the stocks in our database, tens of thousands of stocks that are currently a good quality stock. And then up they come. I know that every stock on my list, and when this was taken, there's about 300 stocks on this list. When this was taken, it's updated every night. So when this was taken, about 300 stocks, I know that every stock on the list is a good stock. Doesn't mean I want to buy it yet, but right now I've got step one. I found what are the best stocks in the stock market if I'm going to go back and invest. So I like that one. Step two, now that I found a good stock, is it on sale? And I look at this way in the real estate market. What if we could find all the really good houses? So we go through the entire MLS nationwide, the entire MLS nationwide, and say, I would like to have a home inspector on every single house in every single house on the MLS. Tens of thousands, just thousands, and do a home inspection. And then show me only the ones that are the best of the best. Those would be good stocks. So do that. And then from those same MLS, I then want you to show me every single house that's on that list that's a good quality house that I can buy at a major discount because it's on a short sale price. Well, you can't do that in the MLS, but in the stock market, you can. We can take that same list, show me only the good stocks, and have just the good stocks, show me only the good stocks I can buy at a major discount right now based on where they should be trading at. And this is what we call marginal safety. It's Warren Buffett's information. It came out of his book, Buffettology, and he actually wrote a formula out, and this is part of the formula below here. It says margin of safety. And it just says, if I can use this formula and find out what the stock should be worth and buy it beneath that price, I'm going to get a good deal. Now, this formula, it's called the discount cash flow valuation method. It's the actual name for it. It's taught at Harvard, Wharton, Stanford, Chicago Booth, Northwestern Kellogg, MIT, and us who teach us. But we are the only company that's actually been able to automate this for every stock in the database. It's a long drawn out process and it changes every day based off of the US dollar index, bond index, things like that. Fed futures rate, discount rate, changes every single day. But we can now go back because everything in our database has been automated now with all that data. And we say, what is actually every stock currently worth? So in other words, how can I find a really good company? It's a good quality stock that I can buy at a major discount based on where it should be trading at. So it's like buying a house as a short sale price. So here's what we're after. Valuation analysis. Stock I'm looking right here is around $37 a share. And then beneath that, it actually says, what's the fair value? Now, the fair value is the price I want to buy a stock at or below. Think of this as a short sale price. If you can buy a stock at or below 70, you're getting a good deal. Right around 70, you're still getting a good deal. Above 70, now you're starting to pay retail price or you're overpaying for something. So what if I could just say, let's go back and find a good stock? Okay, well, here's save. This one right here is save. When I took this screenshot, stock was at $37. It should be worth at least 70. And if I can buy at or below 70, I'm getting a really good deal. Major discount. So 70, and that stock was around 37. And where did it go? Up. Went from 37 to $56 because you bought it at a major discount. So I like to buy things at a major discount. How many guys like to walk into a store and something's on sale and say, I don't want to buy that on sale. I hate paying less money for something. I want to overpay. Well, in the stock market, I like to underpay for things too. So I like to make sure I got a deal. Here's one here for chart VIV. Stock was trading around $9 a share. If I could buy at or below $15 a share, I'm getting a good deal. I like that one too. So I just want to buy a stock at or below $15 a share. And this one went from $9 to $12, which is a roughly 33% rally in 3 months. On top of that, it was a good quality stock. So it was a good quality stock at a major discount. I'd like to buy a really good house that was built extremely well at a major discount compared to what all the other houses are trading for in that neighborhood. How many guys would like to do that and be able to scan the entire MLS nationwide and show me every single house that's a really good quality house that's at a major discounted price to where it should be currently as of today? Wow. In the stock market, we can do that just because of the way the fundamental data works. Here's another one here. This was Dish Corporation, trading at $50 a share. it was really only worth about $29. Remember, this is a formula that Warren Buffett teaches in his book, Buffettology. He actually learned this from his mentor, which is Benjamin Graham, is where he learned this from decades and decades ago. So where'd this stock go? It's overvalued. $50 stock is only worth $29. You're overpaying for something. So where does it eventually have to go? If you start buying houses way above market price, eventually you're going to get burned on it. It's going to come back down to where it should be to a normal price at some point in time. So I don't want to have to overpay. So this makes it really easy. So I have to go back and overpay something. And where'd that overvalued stock go? Went down. Besides the fact that it was overvalued, it was also a bad quality stock. So what if someone comes up and says, hey, you should buy Dish, and then you go back and you say, oh, it's overvalued and it's a bad quality stock. Right after that, don't go any further. Move on to the next trade. So here's one here, TTD, $44 stock. It was actually worth $110, majorly undervalued. Should be trading about 110. It's only at $44. Major discount. Good quality stock on top of that. So now you got a really good quality stock, so major discount. You buy, up it goes, nice gain. So what if we could now, remember technology's changing, what if we could now go back and say, can we automate that too? Wouldn't it be really cool if somebody who understands the stock market, who's an active investor, who's been doing this for decades, could actually go back and write a computer program that says search for all really good quality stocks at a major discount and pull them up within 1 second? Yeah, you can do that. So we just go back to our website now and click on the link that says undervalued stocks. Show me every stock that's either a good stock or an almost good stock, which would be like a B plus stock versus an A stock. Show me every really good quality stock that's completely undervalued in the stock market when I push that button. And then up comes a list, and every stock on the list, if we just go down the middle here, good or almost good quality stock. So I know that every single stock on this list is a really good quality stock, and it's undervalued at a major discount right now. So you can buy these at a major discount. When I took this link, there's about 202 as of this day, 202 really good quality stocks that are undervalued. Doesn't mean I'm going to buy right now, but I know I got a really good stock and it's at a major discount. There's a few more things I want to put on my list here. So far, we just got 2 out of the 4. But look how simple this is. These are things you could not do 20 years ago. And why doesn't your broker tell you this? Because they're making way too much money off of you to teach this to you. So good quality stocks undervalued. So step number 3, we're getting to the 4 steps. We're making this pretty easy. So far, you guys are starting to get this a little bit, yes? Not making it too difficult. Again, go ahead and type up a question if you got one. I'll try to answer as I go through this. I won't get to every one of them. Kendall will answer some of them for you as I'm talking. But I want you guys to learn this because I want you to start doing this. You don't have to pay somebody for the rest of your life, year after year after year, to do something you could just do much easier for yourself. So step number 3, I want a good stock. Put this in real estate terms. I want a good house, but I want to buy in the right neighborhood. So in the stock market, it's the same thing. A lot of similarities between stock and real estate. I want to buy a really good stock that's undervalued, but I want to buy it in a really good neighborhood, a neighborhood that has a chance of actually moving higher, which will help push my stock higher as well. So you've all heard before, don't buy a great house in a bad neighborhood. Location, location, location. Stock market's the same way. So those some of those universal truths, location, location, location. Some of those other universal truths you might have heard about. Number 1, the 5-second rule means it's still edible. You guys remember this from Friends when they dropped that cake on the floor and they wanted to eat it, so they just got down and started eating it? Still edible. How about this universal rule? Remember the official sports drink when all of us were kids? Now, if you're kind of younger and you're on class tonight, you might not get this, but when we all grew up, if you were thirsty, it was pretty simple. You didn't go to the store and buy a sports drink. You went right outside and turned on the garden hose. Universal drink. So we all had those when we were little kids. This was the official sports drink of baby boomers. Excuse me. And our last universal truth, if Flavor Flav can find love, so can you. And this has nothing to do with the stock market, but these are some funny things to kind of break up the stock market every once in a while. You guys remember this? Wasn't that kind of a weird matchup? A little weird matchup. All right, number 1, or I'm sorry, step number 3 for us. We want to buy in a great neighborhood. So on our website, we've just got all 13 different sectors of the stock market. There's a retail sector, there's a financial sector, there's an energy sector, there's a utility sector. There's 13 different sectors of the stock market. And so what we're going to do is I'm going to start investing. Well, let's start investing in sectors that are actually moving higher anyway, because if my stock belongs to that neighborhood and every stock in that neighborhood is going higher, my stock will move up. Think of it as a house in your neighborhood. If you have a really good house in your neighborhood, you bought it at a major discount, and every house in your neighborhood is going up in value, when you put yours up for sale, good chance yours is going to be worth more as well. So we're just going to find a really good sector. And you just look at a good sector. Here's a 6-month chart. And I just draw a line on the 6-month chart. Where was it 6 months ago? Where is it today? Just connect the straight line. and just say, which way is the line going? And you've got now a 33% chance of getting this right. It's either up, down, or sideways. This one here is a downtrend. You read a chart from left to right. This is the consumer staples sector. So here's a sector, medical sector. Which way is this sector going? Sideways to slightly down. Do I want to own a stock in this neighborhood? No, because it's probably not going to be moving up too much. Here's a sector, utility sector. Which way is this going? Again, you read left to right. So if I'm looking for a good stock, why don't I start in this sector first? Because I have a better chance of success. Even if I don't even find a really good stock, my stock will probably go up anyway because the whole neighborhood's going up in value. So wouldn't it be really cool if I could just say, here's the sector? What if there was a link right next to this chart that said, show me all of just the really good stocks in this neighborhood? And there is. So when I'm looking at my sector charts, there's 13 of them. Right beneath the 13 charts, there's a link that says, show me only the really good quality stocks. So I click on that, and then up come all the stocks in the utility sector. And I just took just the top 4 off the list here. There's a utility sector. And then over on the right-hand side, it shows me the fair value. This is the Warren Buffett calculation. If it has a green check mark in it, it means the stock is trading below its fair value price, which means that that's good. It's below its fair value price. So now I've got a good stock that's undervalued in a really good sector. Can you see how that's starting to make a little bit of sense now? Not that difficult. Find a good sector and a good stock that's undervalued. Didn't say to buy it just yet. So now I've got that. We just kind of take a look at it. So if I'm looking at this, I've got the stock and utility sector. It's undervalued. Now, if I go over here to the right hand, it's a good quality stock. That was part of the search. If I look at the chart here, it's a little 3-month chart. I can see that this 3-month chart is going up. This stock over here for 3 months isn't going up. It's a good stock. It's in the utility sector, but it's overvalued. Even though it's a good stock, but it's not currently in an uptrend. This one is. So right off the bat, VIV. I thought, wow, how hard was it to find VIV? Go to the sector that's in an uptrend, click on the good stocks, find the ones undervalued that's currently in an uptrend. All that within just a matter of seconds. See how it's starting to kind of pull together. You couldn't do this 20 years ago. That's why people said you can't do this. But now this is 100% automated. That's pretty cool. So my stock, utility sector, undervalued, and it's currently moving up. And it's a good stock because that was the search. It said only show me the good stocks. So whole process, sector, uptrend. We like that. Good neighborhood. Look at only the good stocks. And then we find the ones that are undervalued that are currently moving higher. 30 seconds or less should all it takes to find a really good quality stock nowadays. It takes you more than 30 seconds. You're just not using the proper tools. Yeah, you're not just going to Yahoo Finance and say, let's just type in a bunch of ticker symbols and see how they pop up. It's not what we're after here. You can also go back and just say, why don't we just see which sectors of the stock market are expected to grow the most this year and next year? In other words, which ones are expected to grow their profits the most? And you can start your search that way. You can start to say, oh, basic materials is expected to grow 42% this year, their profits this year. So then you just go back and next year, they're expected to grow 8% when this was taken. Then you just go back and click on the basic materials. Up comes the chart. And you say, do I like the chart? Click on the good stocks, find the ones undervalued, and do the entire process here. Many different ways to go back and find some stocks. Can't do this on any other website. Pretty cool stuff. So how many of you are starting to think right now, I get it. I'm starting to actually get this a little bit. It doesn't look that difficult. I can get this. How many of you are starting to think maybe I'd like to teach to my kids? And we really believe in teach this to your kids. And I'm going to show you how you can teach your kids some of this as well. We have to teach them a little bit differently, but I'm going to try to do that with them at the very end of this presentation here. So maybe teach your kids this, because think about this. We're taught to go to school to get an education, to get a job. And let's be honest about it. What's really the only reason that you want to get that job? Get a paycheck. Why don't we just teach people how to make a paycheck instead? Could you imagine how much differently our country would be if we taught people actually how to make money versus how to get a job? Then if you actually wanted a job, you can get a job. I still work. People say, why do you still work if you don't need to? I like what I do. At some point, I might not. I can quit. But until that point, I like what I do. So I'm just going to go ahead and keep doing what I do. Does the system have alerts when a stock changes from undervalued to fully valued? Bill, that's a good question, because we do have some alerts. I'm going to show you some of those in just a little bit. Where's the sector analysis on the website, Susan? And the answer is under the stock scanner page. On the website, sector analysis, yeah, stock scanner page. So teach this to our kids. I like that section. So a lot of people are saying, yeah, Mike, I get that. That's pretty cool. But there's always that doubting Thomas. And that's usually the person who's never going to make any money, because they're always looking for a reason not to. And when you look for a reason not to, what you focus on expands. So we say, yes, but what if I'm that one person, Mike? I've tried multiple times. I'm that one person. Even I can see how easy it is on your website. I can see what the steps are. I'm still that one person that no matter when I buy, I'm the one that makes that stock go down. So, okay, let's cover some of that. Remember, we talked about how the stock market doesn't go up every year. Sometimes it goes sideways. Got a little bonus here, and this is called cash flow strategy. It's actually called a covered call, and it's something that many of us already do every day. If you're in real estate right now and you're a landlord, maybe you don't want to be currently, but let's say maybe you're a landlord and you buy a property. You don't actually buy a house because you want to say, I'm in it for the long haul. You buy it because you want monthly income off of it. You want to buy the house, you want long-term growth, and then you want to rent it out on a monthly basis. We all understand that's correct. That's how real estate investing is done. Stock investing should be the same. I want to buy a really good quality stock, undervalued, in an uptrend, long-term growth, but you also have the ability to rent it out on a month-to-month basis, which most people don't know. It's covered calls, very popular strategy. Most people just aren't ever taught that because their brokers don't want you to know about this. Because when you start doing this, you're taking control of your portfolio and they start losing some of that money. So some of those years when the stock market, where it doesn't always go up, it's going sideways. So it's called a covered call strategy. This strategy allows you to earn monthly income on stocks that you own without having to ever sell them. There's many ways to do these. I'm just going to cover a basic one here. So here's an actual article that came off CNBC website, and it says, who says you can't make money off stalled stocks? Covered call options are regularly used by individual investors. They're really done by the average person. They're not done by the big institutions. Although big institutions do buy whole neighborhoods, they buy a lot of houses for their portfolios, but this strategy here is used for just individuals like us. If we own a stock, we can sell someone the right to buy the stock from us. It's the same thing as if I buy a house, somebody will pay me money to use the house over the next month. If I own a stock, somebody will pay me money so they can use my stock and the right to buy it in the future if it goes up. If it doesn't go up, they won't buy it. So this is really best when the stock market's kind of sideways, maybe a slightly pulled back type of a trend. Covered calls work best in a sour market, not unlike ours today. Ours today isn't a really bad market, but we're hitting some highs in the market, lots of inflation. People think the market's overvalued, so they might be ready for a pullback. And if they do, fantastic strategy to earn some monthly income on those stocks. It's like saying, hey, I have a house. I'm not going to leave it empty. I want monthly income. Hey, I have a stock. I'm not going to leave it unused. I want some monthly income. And people will pay you every single month that you own that stock for the right to buy it at a higher price if it goes up. In the meantime, you just get a monthly paycheck. So we can use link on our website, it's covered calls, and basically the strategy is this. I buy a really good quality stock. It's undervalued. I want long-term growth, but from time to time, it might stop going up, might start going sideways for a little bit. At that point, it's starting to move sideways. I'm not really getting the long-term growth anymore, which happens even in real estate. At that point, I'm going to allow someone to pay me some money to buy the stock at a higher price. As my stock's moving sideways, slightly down, someone will pay me money to buy it at a higher price. Maybe they pay me $1 per share on my stock. I've got 1,000 shares. I get an extra $1,000 a month income because somebody wants to use my stock for a month. At the end of the month, I still have my stock. I get to keep their $1,000, and they'll do it again next month. I'll pay you again next month. People say, how does that work? It works quite well. It's a covered call strategy. So got a link on our website, Elite Covered Calls. And if you do that, it'll pull up every really good quality stock. You'll see right down here in the middle, it's a good quality stock. Fair value, these are all undervalued. These are all the stocks in the database that are good quality and undervalued. And then we pull up the options quotes form and tell you how much somebody's willing to pay you every month to buy your stock. So here's a stock that was trading when we took this at around $6.74 a share. $6.74 a share. Not very expensive. Somebody was willing to pay you money to buy the stock, at $7 a share. And the money they paid you will give you about 9% on your money on about a 2-month trade. So you make about 4.5% a month on your money. So someone's willing to pay you money. If you bought this stock, they'll pay you money to buy your stock at 7. So they pay you some cash, and your rate of return is about 9% for 2 months. It's about 4.5% a month. 4.5% a month. Even if you didn't compound that, but you said, what if I just did that 6 times a year? What's 4.5 times 6? 30% a year. That's not too bad. I could deal with something like that. It's much better than 8 to 11. You only did it once every 2 months. Okay. Say, well, that must be an oddity. It doesn't really happen that way. Well, that exact same stock, if we just take a look at another stock here, let's take a look at PHM, Pulte Home. It's a home builder. When we took this one here, the stock was trading around $26.71 a share. And someone's willing to pay me money to buy it. It was at $26.71. They're willing to pay me money to buy it at $27. So if I go to my brokerage account and buy the stock $26.71, someone would pay me cash to buy it at $27. So I'm going to sell eventually. So why not just have someone pay you to sell for a higher price? The money they paid you will give you about 4% return for the money they actually give you to buy your stock. Think of it like renting the stock. I'm just going to buy the stock for a month. Someone's going to buy it for me at a higher price next month, but they're going to pay me to buy it for a higher price. If they don't buy it for the higher price, I still get to keep their money. Either way, I'm going to make about 4% that month. If we take a look at that exact same stock, the previous month it paid 4.43%. The previous month it paid 4.51%. It just pays that much month after month after month after month. It pays about 4.5% a month every single month. Pulte Home Group, take a look at the stock chart. It's a good looking stock. Now it'll go up sometimes, it'll go down sometimes. If it's in a really strong uptrend and making a really big rally, I wouldn't write a cover call. I'm making some money already just by buying the stock. But when it stops moving up and starts moving sideways for a couple months, now it's time to go back and say, how do I still get some extra money off of that stock? And they'll do it month after month after month, every single month for the rest of your life that you own that stock. They'll pay you. How come everybody doesn't do that? Well, because your brokers don't want you to learn that, because you're taking control of your portfolio at that point in time and they don't get paid anymore. Pretty cool strategy. These are called covered calls. So in your training that we've got, and I'm just going to show you how to get some of this actually for free, complete comprehensive detailed course, how to write covered calls, getting started, what's an option, finding stocks, reading the chart, when do I write the covered call, all that information. How do I go back and do some of this? So that's what we do if you're that, yes, but Mike, I'm that one person that caused that stock to go up. So again, what are our 4 steps so far? 1, find a good quality stock. I can buy undervalued and buy it in the right neighborhood. Now the next thing is, I want to buy at the right time. Obviously, I don't want to buy a really good quality stock at a major discount in a good neighborhood if that stock is in a downtrend. I'm not after that. I want to buy just a really good quality stock that's in an uptrend. How do you know when to sell? That's coming up right next, Cindy. So that was perfect question for step number 4, timing. How do I know when to actually sell that stock? That's actually going to be fairly simple. And we're going to look at the actual chart to do that one. How often does your data update? For example, if the market correction occurs, how soon will the charts be updated? Charts are updated all throughout the course of the day when the markets are open. So they update all throughout the day. The searches to find the good quality stocks are done after the market closes each day, but the charts are updated all throughout the day. So timing, number 1, these are some rules that Warren Buffett set out. I really like them. Rule number 1, don't lose any money. And rule number 2, don't forget rule number 1. Well, the easiest way not to lose any money is to know what your exit plan is before you actually get into a trade. If you don't know where you're going to sell it before you buy it, you don't know where to sell, you're probably going to lose your money. Because at some point it will drop. What will you do when it drops? Nothing, because I'm in it for the long haul. Bad strategy. We're not in it for the long haul, we're in it for a profit. So let's discuss, what is the profit? Where do I actually want to go back and sell if it starts to drop? Question is, why would someone actually go back, and why would someone actually pay you to rent out your stock? Because they have to. It's a whole different way the market works. They have to. They put up a quote. When they put up a quote, they have to take your price. It's just the way the markets work. I don't want to get too far into it right now, but an options market, you have somebody who creates a bid, which is a buy and a sell. When they create the bid, they're telling you, I will take your price right off the bat. And so they want to make money, and they make money off of every trade, between what's called a spread. And so the more times they can take your trade and take that spread, the more money they're going to make. So it's a little bit of a loose answer right now, but the answer is they have to. It's just the way the markets go back and work. But they'll only do it up to a certain amount. If you say I've got 500,000 shares, they probably won't take that trade. If you say I've got 1,000 shares or 100 shares or 500 shares, they'll go ahead and take your trade at that point in time. So how do I not lose money? And the rule is I got to start looking at some charts. So don't lose money. I want to buy a great company at a great price, and then I'm going to follow what the big guys do. I'm going to buy when they buy, and I'm going to sell when they sell, because they control the stock market. In the overall stock market, there's 2 buyers and sellers. There's institutions and retail. Now, the institutions are the hedge funds, pension funds, insurance companies, mutual funds, investment banks, and there's thousands of them. In just the U.S. stock market alone, there's over, I think the last time I looked on the Morningstar.com website, there's over 32,000 mutual funds in the United States. That's a lot of mutual funds, but they all do the same thing. So how do you know which one to buy? And why would there be so many if they do the same thing? Because each company wants to make all that money. That's how much money is involved in those. So how do we follow what the big guys do? So here's where we're at here. Here's a stock. We go back and take a look at this one here. Huge stock, but we're going to take a look at the green arrow here, and we're going to add just a moving average. Very simple technical analysis. Things that if I'm just driving my car down the road, I want to look around and see what's happening. If I'm going to involve in the stock market and buy stocks or mutual funds, I want to look at them. And I want to know when they stop moving higher and when they start to drop. Because when they start to drop, I want to sell. So we're just going to put a basic indicator called a moving average. It's this red line. And anytime my mutual fund or stock moves above the red line, I'm going to get a green arrow, which says, hey, my stock is gaining some strength. Now might be a good time to buy. And anytime I'm watching that and it starts to give me a red arrow because it's starting to get weak, drops beneath my moving average, I'm going to get a red arrow. It just says maybe that stock you bought a while back isn't so strong anymore, and you might want to sell the stock based on what your needs are or your risk factors are in your portfolio. So this is when I'm going to think I might want to go back and sell. Now, to confirm that, I'm going to add a couple more indicators. And when I have all three indicators on here, when I've got all three are green arrows, 1, 2, 3 green arrows, that's a buy signal. And when I finally get 3 red arrows, and they don't all come the same day, but when they're all showing red on the top one, red on the second one, red on the third one, when they're all 3 showing red, I'm going to go ahead and sell. And so let's take a look at this. Here's Netflix stock. And Netflix goes up, it goes down, it goes sideways. It moves. It's a very volatile stock, moves all over the place. Right here, I've got 3 red arrows. I've got Netflix, I've got our Coval indicator, and I've got MACDs, 3 indicators. And the Coval indicator and MACDs, they just work similar, but they're not always going to be the same. Sometimes they'll be completely different. Sometimes they'll be close, but they're just indicators telling me that, hey, your stock is getting stronger or weaker. I always want to have a confirmation. So my stock starts to get a little weaker, drops beneath the moving average. My Coval indicator gives me a red arrow, and the MACDs give me a red arrow. Now, the MACDs are a Nobel Prize winning formula created by Gerald Appel, used quite extensively in the financial markets, but it just tells you your stock's getting weaker. Maybe you want to go back and sell. So I got 3 red arrows. When they all 3 give me a red, I'm just going to go back and sell. So I sell. And then when all 3 of them come back and now start to give me green arrows, I'm going to buy. They don't come on the same day. They came about a week apart. When I finally got the 3rd one, it's now time to buy. Meantime, if I just kind of go back where we're at here, I stayed out of that whole drop, and I can go back in and rally to the upside and wait till I get 3 red arrows. So here's a stock. Take a look at here. This is the S&P 500 index, which is the benchmark for the entire marketplace. So if all you did, if you didn't get anything else from tonight's class, 4 steps: buy a good quality stock, buy it at a discount in a good sector, and then you want to buy it when you have green arrows and sell it with red arrows. So if that's all you learn, you're ahead of the game for most investors out there. But here's a stock that actually tracks the overall market, which is the S&P 500. If all you did here, this ticker symbol, this is SPY, ticker symbol SPY. If you bought this one index, this one stock, trades like a stock, but it's actually a mutual fund, but it trades like a stock, so it has minimal fees versus a mutual fund. And because it's a stock, you can write covered calls on it if you want. But if you just bought this on 3 green arrows and just held on to it for a few months, 5 months or so, and after about 5 months, you now got 3 red arrows. 1, 2, 3. So you sell. You got 3 arrows, so you sell. And then the stock sells off, drops 19%. But you avoided that 19% loss because you're not in it for the long haul. You sold and got 3 arrows. Now, you're not going to be able to sell at the exact top, but you sold about a week later, and you still saved most of that gain that you just had. Bought on some green arrows, so I'm just looking at charts. What if you can't look at a chart? What if you say, hey, I don't know how to read any of this, I'm just going to trust my broker, and the whole stock market has a big crash. And so you go to your broker and say, hey, what happened to my 401k? And the answer is, well, it used to be a pot of gold a few weeks ago. Now it's just a pot of something else. Or maybe, how about this? I like this one here. Stock market crash. Hello, Mom. Yeah. Is my old room still available? Because eventually the stock market's going to crash. When that happens, the real estate market will go down with it as well, because the two are tied together. So what do? I want to make sure I'm just not owning stocks when the whole stock market crashes. Well, how do I know when to sell? When I've got some red arrows, I'll say it's probably now time to go back and sell. Do you get any signal when there's 3 green or 3 red arrows from selected stocks? Yeah, you do. The signal is the 3 green arrows, but we can actually put those in a watch list, and we can automate them so that when those stocks you do like give you 3 green arrows, you get a text. And when they do give you 3 red arrows, you get a text. I'll show you that as well. So now here's Fidelity Magellan. Here's a mutual fund, one of the biggest mutual funds in the country. 3 red arrows, we sell. And it drops. Then we finally get coming through here, 3 green arrows, and we buy, and it goes back up. But what you did is you sold over here towards the top, and you bought down here towards the bottom. Not the absolute bottom, the absolute top, but you got about a week difference, but you still negated about 90% of that huge drop to the downside. I like that. Nothing special, some basic arrows that say, hey, pay attention. What you're looking for, here's the Vanguard mutual fund, and you're trying to stay away from some of those major drops. That's all that we're after. Here's Amazon. You guys know Amazon, big, huge company, 3 green arrows. We buy, goes up. Then all of a sudden you start to see 3 red arrows. So what do you think we should probably do? Sell? Yeah. Meantime, you made some money to the upside. You got 3 red arrows. So we sell. Down it goes. Drops 600 points. Now we start getting some green arrows. Time to jump back in again. I like this one here. This is an email sent from one of our students to one of our instructors, Stacy. My homework stock, my homework stock submissions are as follows: A, C, B, F, F, Aurora, or CRON, or any stock from the cannabis sector. Not sure why that's their favorite sector, but I understand. SBGI, Sinclair Broadcasting Group, or I like this one, AGN, Allergen. I pay enough for Botox. I like that. I pay enough for Botox. It's time I start learning to make some money off of it. So they're actually saying, what are some of the stocks I use on an everyday basis? Hopefully not every day. How can I make money off of those to actually then make a profit? So you can use that profit to pay for using their products, I guess. Good way to go back and do that. I'm hooked. I absolutely love learning from you. That's pretty cool. Here's that same stock, Allergen. 3 green arrows. What do? We buy. Goes up. How cool is that? Goes up 25 points. Didn't go up immediately. It took 2 months. So for 2 months, you did nothing. You just waited for 2 whole months. You did absolutely nothing. This is pretty hardcore here. And then all of a sudden, after a couple of months, you get 3 red arrows. So what do? It's time to go back and sell. So it goes back and it drops. So we're going to sell. And then you stay out of it for, each of these lines here is a month. So 1, 2, for about 2.5 months, almost 3 months, the stock drops. You don't do anything at all. You just wait. I know it's pretty boring, but you just wait and you wait and you wait. After 3 months, hey, I got 3 green arrows. It's now time to buy. And then we start to rally that to the upside. Meantime, stock is lower, but your account went up 23%, even though stock is down in value, because you missed the majority of that downfall. And the reason you missed that is because you told yourself, I'm not in it for the long haul. That's a sales pitch. I'm actually in it for a profit. And those are 2 completely different things. And the answer is to yourself, do you deserve to make that money? Yeah. So we believe in actually making lots of money. We give a lot of it back. So in some of our trading services that we have, we actually trade live in front of our students. We donate 100% of all of our trading profits to different charities. So here's some of the recent charities we've got through here, but over $218,000 just recently we've just given away to charities. So if you're one of our students and you've got a charity you're interested in, send us an email. We'll go back and take a look at it, because we're always looking for some good charities. So how many guys think I'm starting to get this? I think I'm starting to get this. So my steps: buy a good stock, undervalued, in a good neighborhood, buy on greens, sell in the reds. Will you be perfect? No. But should you then start to outperform the stock market like Warren Buffett and Peter Lynch said you both should be doing right now? Yeah. And then on top of that, you're not paying, not only outperforming, you're not paying all those extra hidden fees, right? So investor.gov, go back there and look for the mutual fund fees, and you'll see the average mutual fund is about 3.5% in actual fees on a yearly basis, but they're not listed anywhere because they're hidden. So as an example how those fees work, if you put your money into a mutual fund, correct? Someone says, oh, I'm only charging X amount of money to manage your portfolio. That's what your bank money manager is charging. The mutual fund's got all their extra fees by themselves. Just your bank money manager might not be charging you that much, but the mutual fund charges them. So you buy your mutual fund, you buy some shares of stock, you put money in. Well, what does a mutual fund manager have to do? They have to go out and buy some shares of stock to up the value of the mutual fund to fit wherever your stocks just did. Somebody else decides that they want to sell. So what does a mutual fund have to do? They have to sell, liquidate shares of stock in that fund to bring it back down so that everybody has an equal amount now that somebody sold some because they want their cash. Well, what happened to all those transaction fees? Those are short-term capital gains. Who's paying for those? Those are all happening every single day in a mutual fund, thousands at a time a day in a mutual fund. Who's paying all those short-term capital gains? They have to pay somebody. Yep. Your mutual fund manager is paying them out of the profits of the mutual funds. So those are some of those hidden fees that you don't see. There's, oh yeah, we're not charging you a bunch. The ETFs don't have those. In ETF is like a mutual fund, like the SPY, because it just tracks those same stocks. It doesn't buy and sell, it just tracks. Whole different analysis how those go back and work. So starting to get this, I get this. Okay, let's see how this works. So I've got a stock here. It's got some 3 green arrows. So the more mutual funds you invest in your portfolio, you're being overcharged on each one. Absolutely you are. And just to let you know, the majority of mutual funds have the same stocks in them. So you might have 5, 6, 10 different mutual funds, but a lot of those mutual funds have the same exact stocks in them. So you're just doing the same thing over and over again. So I'm starting to get this. Let's see how this works for us. So now I got a stock. It's got 3 green arrows. So what do we want to do? Let's put this together. Let's see how this actually works. See if you can follow me. I'm looking at the chart. I'm not going to tell you where it's going or what it is. I want you to see how well you're following me with what I'm trying to teach you. If you've got this, you've got the ability now to start learning this yourself. It'll take you a little bit to learn it, a few weeks, but once those few weeks are done, you're done for the rest of your life. It's like riding a bicycle. You don't have to do it over and over. Learn it. Once you learn it, you've got it forever. This is the same thing in the stock market. It'll take you a couple of weeks to learn it. Really, that's it. And then at that point, once you've learned it, you just write some basic covered calls and manage your portfolio. It's about an hour a week. That's what it boils down to. And it can be the weekends if that's what you want. So now, and again, you want to teach this to your kids too, yes? Okay, so I've got a stock here. I've got a green arrow, a green arrow, and a green arrow. So what do I want to go back and do? Now, I'm just going to tell you ahead of time, it's a good quality stock. It's in an uptrending sector and it's undervalued. So it fits the first 3 rules. Rule number 4, buy and sell at the right time. 3 green arrows, we're going to buy. Okay, so then we're going to hang on to it. Looks like we're going to hang on to it for all of about a month and a half. There's my time frame down here, a month and a half. So I got 3 red arrows. What should we do? Sell. Okay, good. Let's go ahead and sell. All right, good. So we're in at 60, out at 65. Took about 3 months, made $5. Are you active? Could you do that? Took about 3 months. Okay. Then it drops. And it drops. And all of a sudden, after it drops, I see, oh, I got a green arrow and a green arrow. What should we do? So it dropped. I got 2 green arrows. What should I do? Should I buy? No. We want to see what? 3 green arrows. Okay, good. So I don't have 3 green arrows. I'm not going to buy just yet. So now, I'm sorry, 2 green arrows. So I wait for the 3rd green arrow. And here it comes. Now I've got 3 green arrows. 1, 2, 3. What should I do? Buy. Absolutely. I'm going to go back and buy. So now I'm in at 32. Remember, I sold it way up here at about 65. Missed this huge drop here. Took about 8 months. For 8 months in a row, I did nothing. I just sat and I waited. I'm bored. I'm bored. What can I do? I'm bored. Nothing. 8 months. Buy at $32. Now goes up for about a month and I got 3 red arrows. I'm going to sell. In at 32. Oh, I'm going to sell it out at 30. So I bought right up here and I'm going to sell down here. I lost $2. Is this perfect? No. I'm just trying to get rid of those huge losses from the buy and hold strategy. I'm worth more than that. So I lost $2. I just have to deal with it. Now, then I got 3 green arrows again. What should I do? Buy. So I'm going to buy back in through here. And I'm going to hang on. I'm back in about 32, same price I was before. Now I got 3 red arrows. About 6 months there, I got 3 red arrows. Time to sell. In at 32, out at 50, made $18. Okay, cool. And then I'm waiting. Oh, I got 3 green arrows now. So after I got my 3 reds, only about a week later, I got 3 greens. What should I do? Buy. Okay, took a week. In at 50. And then it goes up. I got 3 red arrows. Now it's at 60. I'm going to sell down here at 60. 3 red arrows, and I'm out. Okay, good. So this whole thing took me 18 months. We did 4 trades in 18 months. People say, I don't know if I have time for this, Mike. Okay, well, could we do 4 trades in 18 months? Okay, maybe I can do that. 4 trades in 18 months. And at 105, let's say we did this with $100,000 in portfolio. And I'm not saying you have to have 100,000. You might have 5,000. You might have $10. But the rates of returns are the same. You're not a better trader because you have more money to invest. You're a better trader because you get a higher rate of return. DC says, is it best inside of buy and sell inside of your trades in a Roth IRA? I like a Roth. I believe that everybody should have a Roth, a regular IRA, and a business account and a personal account, all 4 for different reasons. If you can only do one and you're younger, I'd say open up a Roth account. If you're if you need the money right now to pay bills, then just a regular personal account goes through there. Isn't there a limit on how quick you can turn around? I mean, buy the same stock you just sold? Yeah, we did this here 4 times in 18 months. And the actual answer is no, you can buy and sell the same day if you want. But if you buy and sell the same day for 3 trades in a row, now you got to go back and classify yourself as an active investor. And you can do that. You just have to go back and just classify it with your brokerage account, so classify with the IRS. But no, you can still do it, buy and sell the same day. But that's not what we're trying to teach you. We're trying to say 4 trades in same type of trades here in 18 months. So no rules on that one. So buy and sell through here, and then your total time through here. If we take a look at our total profits, was $31 per share. So we had $100,000 invested here of our money here. It's about $31,000 in profits. And this whole stock, this entire time, kind of went where? Just sideways. For 18 months, the stock went sideways. You've made 4 trades in 18 months, so on average, about 4.5 months per trade. You made 31% on a sideways trending stock. Now, if you just owned that stock and you just bought and held because you're in it for the long haul, is what you're taught to do, you made 0 in a year and a half. Your portfolio is the same price it was a year and a half later, versus it could have been up 31% because you looked at a chart. Nothing major. You can learn all kinds of really cool stuff on charts that you can learn if you want to. Learn some basics. I just bought it when it was heading higher, and I sold it when it was heading lower. It's not perfect. You even had a loss in there. Now, a lot of people say, well, can I automate that? Wouldn't it be really cool if I could just automate that entire process so I didn't even have to do that? And the answer is, I bet there's a really cool website built by an active investor for investors that would automate this entire process for you, make it even easier. And again, technology changes everything. There's no reason we can't actually do this. All right. So I can just go to the website. I can say, click on all stocks that as of today have 3 green arrows as of today, which means the third one came today. The first one might have come a week ago, the second one a couple of days ago, but the third one came today. So as of today, 3 green arrows. It's updated every night, so we can look at the stocks that had 3 green arrows and place an order to buy them the next day, and up comes this entire list of stocks. And there'll be probably every day about 200 stocks on that list. Now you find the stock you like that's in an uptrend, got 3 green arrows. It's a good quality stock, it's undervalued in a good sector. And you take that stock and we go back to your website and we just type it in over here to our link. It says watch list. These are stocks you're watching, either ones you're waiting to buy or ones you just bought. Type it in. Now, once you type in the ticker symbol into your watch list, up comes a little chart of it. So every day you'll see all of your charts in one place on one day here. And then you're gonna go down here in the very bottom, which is pretty cool. And you click on the link, it says SMS alert and or email alert. And you slide that slider from off to on. And now you bought that good quality stock in your account that's undervalued in an uptrend, that 3 green arrows, and you bought it in your brokerage account. So you go to TD Ameritrade or Charles Schwab or brokers, Interactive Brokers. I don't really care who your brokerage firm is. And you can use all of them, you know. But you buy your stock and you own it. Now that you own it, you go back and you type it in on the watch list and then slide the on button here to your SMS alerts. And then as soon as that stock you own gives you 3 red arrows, you don't have to look at your portfolio every day. As long as you have a cell phone. Anybody have a cell phone? I have a cell phone. I bet you have a cell phone. As soon as that stock you own, whatever stock you decide to buy, has 3 red arrows, or any other stock in your portfolio has 3 red arrows, you're going to get a text. The text comes out about 5:30 at night Eastern. It just tells you, hey, your stock today, stock you had, PPC was ticker symbol, Pilgrim's Pride Company, is listed in the 3 red arrow search, which means that one of the stocks in your portfolio today has 3 red arrows. You don't have to look at your portfolio every day, as long as you can just check your text messages, and it comes around 5:30 every day Eastern time. Automate that entire process. So I can automate the whole process. I can go back and say, show me only the stocks that have 3 green arrows today that are actually good quality stocks. You can say, show me the 3 green arrows, good quality undervalued stocks. If it's in an uptrend, you purchase it. And then you go back to your watch list. Now you purchase it. We'll show you how to do that when you come. If you don't know how to buy just yet, we'll teach that if you want to come to one of our classes. You buy the stock. It's really simple. No commissions to buy the stock. Most stocks now are 0 commissions. So no charge to them. You buy your stock, 1 share, 5 shares, 10 shares, 100 shares, whatever it costs you. So you buy 1 share, your total cost on this one here would be $33.58. Buy it. Now you go back into our watch list, type in your ticker symbol, slide the on button, and any of your stocks in your portfolio, when they have 3 red arrows, we're going to send it to you. Automate the entire process. It can't be much quicker, easier than that. Things you couldn't do 20 years ago. So if anybody's telling you, you can't do this, you're not smart enough, you don't have enough time, they're trying to sell you something else. They're trying to sell you something where you'll pay them every year for the rest of your life. And that's really what you're after there. I use MACDs on some. Yep, I like MACDs. I don't really care which indicators you use. If you use a different company, you look at some different indicators. You just want to make sure you have at least 2 to confirm whatever you're after. And I like MACDs. Almost everybody uses those. All right, so let's kind of recap this now, where we're at here. Number 1, buy a really good quality stock. Hopefully you're writing these down. Buy it on sale. Just like you would do if it was real estate. It's like you do any other business you're thinking about buying. Buy a good quality stock at a discount in a good neighborhood, because I want that neighborhood. If that neighborhood's a good neighborhood, it's going up in value, it's going to take my stock with it automatically, even if I didn't pick the best stock. So it just has a better chance of going up. And then buy it when it gives you 3 green arrows, sell it when it gives you 3 reds. Could you be better than that? Absolutely, you could learn more than that. But at the very least, you should now do a much better job making money in your portfolio than your current brokers are doing or your current money manager is doing for you. So set yourself up for some retirement here. Let's say that you're getting close to retirement, or maybe you're 40 or 50 years old, or maybe even 30, excuse me, and you get about $75,000 to invest. I'm just picking this as a retirement example. If you've got 5,000, that's okay, same rate of return. Just kind of see where we're at here, just for demonstration purposes. So you start with your portfolio. Maybe you got a 401k, or you currently have an IRA or a Roth or something like that. And you average about 17% a year for 20 years. Now remember, the stock market is going to give you 8 to 11 anyway. So if you could just do a little bit better job than that, even if you just write a couple of covered calls a year, 3 of them a year, and you got an extra 4% on top of that, that's an extra 12%. So let's see if we can get to about 17% over 20 years. That 17% over 20 years, your portfolio comes out to about $1.7 million. That's a huge difference between that and 75K. Now you get retired and you're set for retirement. Well, what do I do now? Do I just take my money out and live off of it? No. Now you want to actually work it with a covered call trade. If you have $1.7 million worth of real estate and you want to retire, did you sell your real estate? No, you just continue to rent it out and use that rent to pay your bills. Well, if you've got $1.7 million in the stock market and you could get about 3% a month writing some covered calls, that's $52,000 a year. I'm sorry, 52,000 a month. Let's say you weren't even any good at this. Say you're really bad at this. You only got 1.5% a month writing covered calls. That's 26% or $26,000 a year. I'm sorry, $26,000 per month income. Wow. What if you only got $20,000 a month? Because you're even worse. You're the worst covered call writer in the world, and you got $20,000 a month, which is rent from the stocks that you own. Could you live off of that? Absolutely. And the difference is you could live off that because you made a couple of changes versus what you were taught in the past. Stock market isn't what your parents were taught. Buy low, sell high. What's low and high? I don't know. Okay, so if you don't know, what should you do? Well, just buy and hold then. Stock market is completely different than it used to be. It's not quite the same thing. So if you started making 20,000 a month, would you go out and maybe buy one of these? My sister might buy one of these, the Sparkle edition. I might buy one of these, the non-Sparkle edition. But what would you do with an extra 20,000 a month? Pretty much whatever you wanted, right? And next month another 20,000. Next month another 20,000. Next month another 20,000. So if you like what I was talking about and want to learn more than this, and find out how you can actually do this. It'll take you a little while to learn it. And by a little while, I mean a few weeks to learn it. But once it's done and you have it, it's yours for the rest of your life. Use it, teach it, share it with your kids. We've got several classes coming up. All of our classes are 2-day classes. They're online, make it easy for you. So you can do it from anywhere across the country. And they're Saturday and Sunday classes from 11 a.m. Eastern to 6 p.m. And they're done, they're live. They're with an instructor, usually 2 instructors on there, and we assign some coaches to you to help answer all of your questions. They're interactive. You get to ask questions through there. And we look at the stock market. We use current examples, and we actually place some live trades in the class on Sunday to be filled the next morning when the market opens up. And if you're comfortable, you want to place some of those, that's up to you. But we're just trying to teach it to you live with real examples. We're actually the only company that I know in the financial markets when we teach classes. We trade live with real money in our own personal accounts in front of you, the students, because we want to show you how this actually works, not just theoretically. So we got a complete monthly cash flow course, which is manuals and videos, all that kind of cool stuff. We normally sell that for about $799. You can go to our website and buy it. It is for sale for $799. We've got a live 2-day workshop, which is the interactive class, which we charge about $1,500 for, and then just the monthly website access. And so we give this to you so you can actually use this. That's $25 a month. We get for 2 months access for this. Normally, this entire process, if you pieced it together off our website, we've got $2,300. Protect Wealth, because you're working with them and you're actually coming through as their student and they're using a lot of your information for some of their other trainings that they have. They already have you. So they've already got that. So we're able to give this entire process here as a pretty good discount here at about $197 for the entire thing, everything. All of the manuals, the videos through that, the entire 2-day class, the coaches that are assigned to you to work with you to ask, you can ask questions, interactive, the live training through the website, all that for about $197 for 2 full days. Now, we've got about 35 spots available, and I say only 35, which is kind of a weird number, but it's because I only have so many coaches to work with students in each class, and I need to make sure you have ability to ask questions because I want this to be very interactive. You're learning to invest your portfolio or take control of part of that for the rest of your life. And I want to make sure that you've got questions you can ask and get those answered. So you can register for that class. It's $197 for all of it at protectwealth.com/stocks, because this is the stock market portion of the training. But just to make sure that you learn this, we're going to give you the covered call course. We're going to give it to you ahead of time. So once you register, we'll send this to you ahead of time before your actual class, because I want you to review it. I want you to go over it. I want you to start studying some of this. How do I make that money in the covered calls? But I want to make sure that you learn this properly. It's only $197, but I'm going to make it really easy for you because honestly, I want you to take the course because I want you to learn this. I'm only here teaching this information, created all this information on our website for us because someone taught this to me. I used to be a grocery manager at Safeway. And when they taught this to me, it changed my whole life. I want to change your life because whose lives could you change going forward? So I want to make this easy for you. Enroll for the class, $197. I'll send you all of your information before the class starts. Take the class and then decide. At the end of your first day, it's a 2-day course. At the end of the first day, if you can't honestly tell yourself, this is the best financial stock market course I've ever taken, I understand this is a great company, these people really care about me. If you can't say at the end of the first day, just tell us you don't like it and we'll refund your entire $197, all of it. I'm not trying to force it to you, but I believe in this so much. I believe you're going to make money with this because our students have fantastic results. We get all kinds of positive testimonials for this. I want to give you 100% money back guarantee at the end of the first day. So if you can't honestly say this is the best class you've taken and you really feel comfortable with us, ask me for your money back. Just say, I don't like it. I won't push you. I won't make any excuses. I'm just going to refund your credit card. I'm going to make it really easy for you. So 100% satisfaction guarantee on that. But as a bonus, I'm going to let you keep your training materials I sent you, because I really believe that if you did say I don't like it, you will at some point say, but I did like it. I just wasn't maybe ready for it. I'm going to come back later on. So I'm going to let you keep your course material. Keep it. It's yours. I'm not even going to ask for it back. And as a bonus, bring a guest with you. So your $197 includes a username and password to the website. The material is for 2 people. So bring somebody else with you to your 2-day live training. They'll be able to ask questions. They'll get the same interactive training courses. They'll be working with the coaches just like you would. So bring them. So if you've got a spouse wants to come, if you've got somebody else in your family, maybe maybe a child, maybe a little bit older child or something wants to come, bring them as with you. Because I always know that with 2 people doing this, you learn more if you got the ability to talk with somebody else. Because the more you can communicate with this, the more you talk about it, the more your brain starts to kind of accept some of that information. So bring somebody else with you. So this includes a guest, and they get to come through. Now, as another bonus, which we kind of talked about earlier, I want your kids to learn this. We've created a new series of investing for kids. Now, I've got some younger kids on this little slide right here, but it's really meant for 12 to 18-year-olds. So if you've got some kids that are in school right now and they're not learning all about finances, how the stock market works, how bank accounts work, how credit cards work, how compounding is, we've got training series. It's 3 different training series on here. It's just videos on here. We'll go ahead and send these to you so you can give them to your kids. It's really meant for 12 to 18-year-olds. If they're over 18, maybe you have them come through as your guest in their class for $197. But I want your kids to learn this. And by the way, if you say it's not great, you don't like it, want your money back, I'm going to let you keep those videos as well for your kids, because I really believe they need to learn this at a much younger age than they're learning right now. So again, about 35 spots available. You want to go to protectwealth.com/stocks and get registered. So we've got several classes coming up. We've got some dates and times on the website if you want to go to them. For protectwealth.com stocks, it's online class, $197 for you and a guest. For all of that training, the cover call material, the manuals, the videos, the information for your kids, the second username and password, and 100% money back guarantee. If you don't like it, just tell me. I'm not going to make it difficult. I'll just say it works for me, because I believe at some point you'll come back to us. So go ahead and get registered. Go to protectwealth.com/stocks. You see it right here in the yellow on the screen, and register for stock market training. And I'll see you in a couple of weeks at one of our online training classes. So I'm really looking forward to teaching this to you. I really believe that we've got the ability to help you change your life. And then from that, you'll teach this to other people and help them change their lives as well. Because right now, let's be honest about it, all the stuff we're reading in the news isn't that great. And what if you get stuck at home and say, okay, you're going to have to stay at home. You can't leave your house. And we're going to say you can't go to work and you can't drive your car. How are you going to make money? You can still do this from home. And you do it inside of an IRA account, a regular brokerage account in your name, a business account, a Roth account, really makes no difference. So all these things we can go back and do to start making some money and putting ourselves in charge of our financial future. So guys, I really hope to see you here next couple of weeks. Protectwealth.com/stocks. Go ahead and get registered. So thank you very much.